Welcome to the lecture on tax depreciation methods. So far we have discussed about the methods in which the special mention is to double declining balance method of depreciation or declining balance method of depreciation, SOYD, that is sum of years digits method, and also the straight line method. Now, based on the US tax laws, there was a depreciation method which was suggested, that was known as modified accelerated cost recovery system. So, basically in this we talk about a term known as recovery period. So, in this method basically there are few conventions which are used. So, first is that we have the recovery period rather than the useful life of the asset. Half year convention is used to avoid very large depreciation during the first year, because it is assumed that if the capital's asset does not depreciate too large during the first year, the capital can be used for other investments. So, during the first year only half of the year's depreciation charge is taken into account, and this is known as half year convention. Now, in this case, switching from declining balance method to straight line method that we have discussed in our earlier lecture is adopted, so that you can come to a value of 0 salvage value at the end of the period. So, in this case it is assumed that at the end of the recovery period whole of the assets cost is recovered. Now, in this case the assets are categorized under different property classes. So, depending upon the assets useful life, basically there are different property classes, and the asset is required to depreciate fully during that period. Now, these different property classes are based on the recovery periods and based on the class life of these properties, which is their average life. So, in that the 3-year recovery period is for special tools for manufacturing fabricated metal products etc., and the depreciation method which is adopted is double declining balance method switching to straight line with half year convention. So, we will discuss how we calculate the depreciation schedule for all these property classes. If we have been given the assets like automobiles, light trucks, computers or copiers, then it is kept under the recovery period of 5 years. So, 5-year property class which has class life of normally more than 4 years and less than equal to 10 years. Again it has the same convention being followed, DDB switching to straight line with half year convention. Then 7-year period, it has basically the class life more than 10 years, but less than or equal to 16 years. The assets which come under this category are office furniture, fixtures and railroad track, and again the same depreciation method is applied, DDB switching to straight line with half year convention. Recovery period of 10 years with class life of more than 16 and less than equal to 20 years. Assets are used for petroleum refining and for the manufacturing of castings and forgings. Railroad cars come under this category. They are basically assumed to be recovered in 10 years of period, and here again you have the convention of DDB switching to straight line with half year convention. Further, in the 15-year period, recovery period, basically you have the equipments like telephone distribution equipment, wastewater plants etc. They have the class life of more than 20 years and less than equal to 25 years, and here the depreciation schedule will be followed by this rule 150% declining balance and switching to straight line with half year convention. So, again further for 20 years which has class life of more than 25 years, you have the equipments as municipal sewers, electrical power plants, etc. And here also you have 150% declining balance switching to straight line with half year convention. So, these are the 6 types of personal properties classes. Apart from that, you have 2 types of real properties. Under that you have 2 recovery periods, 27.5 years and 39 years. So, this is for residential rental property apartment buildings, and it has SL depreciation with half year convention, and for 39 years you have non-residential real property, office buildings, elevators and escalators, you have SL depreciation with half year convention. So, for the 2 real property classes you use the straight line method of depreciation with half year convention, and for the 6 personal property class you use the first 4 is used with DDB switching to straight line half year convention, and the last 2 is with 150% declining balance switching to straight line with half year convention. Now, how we calculate the depreciation schedule during this calculation using MACRS method. So, let us calculate. Now, let us say we have an equipment with recovery period of 5 years. So, as we see that the equipment which is coming under that property class, here the depreciation method is DDB with switching to straight line, DDB switching to straight line, half year convention. Half year convention means during the first year the depreciation charge will be calculated on the basis of only half year. So, in that case if you look at the year, if during the first year only half year is calculated, it means it goes in the 6th year. Since only half year depreciation charge is calculated here, so half plus 1 1 1 1, so it will be only 4.5 years. So, half year will be remaining here. So, in this depreciation schedule we will have under the year column you have up to 6 years. Now, let us see, you have to calculate the depreciation charge. Now, depreciation charge is to be calculated using both double declining balance method as well as the straight line method, because the condition of switching to straight line is applied at the time when it is felt that the depreciation charge calculated using straight line method is larger than that calculated by using double declining balance method. So, if you calculate using DDB and if you calculate using straight line, we will calculate based on the 2 and we will see which one is larger and that will be calculated. Then we have the book value, at the end of year. So, during the first year, since only half year convention is used, now in this case using DDB, when you use, now using DDB depreciation rate will be 1 by 5 into 2. So, it is 40%. So, if you take as the amount as 100%, in that case using DDB what you get is half, since it is half year convention. So, half into 40% of 100, that is 20%. So, basically we are taking the 100 as the first cost of the asset. So, 20% is the depreciation charge when we take the DDB method. If we take the straight line method, since it is done for half year and charge is depreciation rate is 1 by 5, so it will be coming as 10%. So, what we see is this is more. So, this depreciation charge will be calculated, and because of that the book value will be 100 minus 20, that is 80%. So, book value remaining at the end of year 1 is 80%. Now, if you go to the second year, in the second year using double declining balance method, now this half year convention has been applied for half of the year in the first year. So, now we will apply for the full year. Now, in this case using double declining balance method, it will be 40% of 80. So, basically it is, you can have 80. So, it will be 80, that is 32%. Now, in this 32%, now we will calculate using a straight line method. We see that the life remaining at present is 4.5 years. So, using the straight line method, the book value at the end of year 1 is 80. So, using the straight line method, the amount of depreciation will be 80 divided by 4.5, because in straight line depreciation method the depreciation charge is 80 divided by 4.5 or 80 multiplied by rate. So, 80 divided by 4.5. So, 160 by 9, and that will be 17.78. So, in that case again we see that this is larger. So, we will have this as the depreciation charge, and it will be 80 minus 32, that is 48 as the book value of the asset. Then now we have 48 as the book value at the end of year 2. So, using DDB, the assets depreciation will be 40% of 48, that is 19.2%. Now, using the straight line, we have time remaining now as 3.5 years. So, it will be 48 divided by 3.5. So, it is nothing but 96 by 7. $13.7. So, what we see is again this charge is larger, the depreciation method still adopted is double declining balance, and that is why it will be 48 minus 19.2, that is 28.8. Now, again we will calculate using the double declining balance method. It will be 40% of 28.8. This will be 11.52. Now, if we calculate using the straight line method of depreciation, the life remaining is 2.5 years. So, it will be 28.8 divided by 2.5, and this comes out to be 11.52. So, basically here both look equal. So, switching occurs at this time itself, because after this time you will see that the amount of depreciation which we calculate based on the two methods by this method it will exceed as compared to the DDB method. So, we have the book value as 28.8 minus 11.52. So, it is 17.28. Now, if we calculate using DDB, it will be 40% of 17.28. It is nothing but 6.91%. And if we calculate this depreciation charge using straight line, we have 1.5 years of time left and you have book value as 17.28. So, using straight line 17.28 divided by 1.5 and it comes out to be 11.52. What we see is that the amount calculated using the straight line method exceeds as compared to that calculated using the DDB method. So, the switching occurs in fact at here itself, but here it is adopted by this method. So, your amount remaining is 17.28 minus 11.52, that is 5.76. And this 5.76 basically will be done here. So, you will get 5.76 and this will be 0. Basically, this 5.76 is nothing but this is the rate of depreciation now onwards. From here itself, this rate of depreciation will be applicable. Now, this rate of depreciation, using this you have only half years left. So, into half comes out to be so for half year it comes out to be 5.76. So, 5.76 by 1 by 0.5, that comes out to be 11.52, that is our rate. So, 5.76 is the depreciation charge and ultimately you get the book value as 0. So, this is how we calculate the depreciation schedule for MACRS method. Now, in this method some points which we discussed needed to special mention that basically there is no meaning of having any salvage value, because whole the cost is recovered. So, in this case ultimately the whole cost has to be recovered and your salvage value is treated as 0. Now, if we see the 3% method, suppose for example, if we calculate using the 3% method. So, for 3-year property class, in the same method we can calculate the depreciation schedule. In the first year you have using DDB and using straight line. So, what happens here, rate of depreciation using DDB will be 2 times 1 by 3, that is 66.67%. So, in the first year you have, since it is half convention, year convention, half into 66.67%. So, it is 33.33% you can have, and if you take using straight line it will be half of 100 by 3. So, it will be something like 16.67%. So, basically using the DDB method you are going. You go to second year, in the second year, now your book value which is remaining at the end will be 100 minus 33.33. So, it will be 66.67. So, in the second year, now your rate of depreciation is 66.67. So, it will be 66.67% of 66.67, and this will be 44.45. Now, if we calculate using the straight line method, we see that you have 2.5 years left. So, you have book value as 66.67 divided by 2.5. So, it will be 33.33. Sorry, 66.67 divided by 2.5, it will be 26.67. So, in the second year still we see that DDB is having higher value. So, once you have this, your book value will be 66.67 minus 44.45. So, it will be 22.22. Now, in the third year, your book value is 22.22. So, it will be 66.67% of 22.22. So, it will be 14.81. Now, in this case book value is 22.22 and your life remaining is 1.5 years now. So, it will be 22.22 divided by 1.5. It will be 14.81. So, what you see is here they come equal, it means here the switching will occur. So, both are equal and so switching will occur here and it will be 22.22 minus 14.81, 7.41. Now, this 7.41, since it is a half year convention, in the fourth year the 7.41 will come here, and because the rate is now 14.81. So, 14.81 at this rate for half year it comes out to be 7.41, and so in this year end you will have value as 0. So, this is how you compute the depreciation charges during the different years. Now, if you have, so this is for 3 year and 5 year class, we can compute the depreciation method for the different property classes, as we have seen that for 5, 3, 5, 7 and 10 years of recovery period, we use DDB switching to straight line. Now, let us say if we go to the 15-year recovery period. So, in that case, so if it is a 15-year property, recovery period is 15 years, in that case the depreciation schedule is basically depreciation method adopted is 150% declining balance switching to straight line, half year convention. Now, in this case, what we see is for 15-year property, rate of depreciation will be one by 15 times 150%, that is 1.5. So, it will be basically 10%. So, using 150% declining balance, when you go with declining balance method of depreciation calculation, your rate of depreciation becomes 10%. Now, in this case, if you look at in the first year, using 150% dB and using straight line, and then you have book value. So, in the first year, using 150% declining balance, and since you have half year convention, half of 10% of 100, so it is 5. Using the straight line method, half of 100 by 15, so it is 3.33. So, this is larger, and your book value will be 100 minus 5, 95. In the second year, book value is now 95. So, in the second year it will be 10% of 95. So, now it is calculated for every year. So, 10% of 95, that is 9.55. Now, in this case, using a straight line, you have 14.5 years left. So, it will be 95 divided by 14.5. If you take this amount, 95 divided by 14.5, it will be equal to 6.55%. So, you see that this one is larger, it is basically 9.5. So, the book value comes out to be 95 minus 9.5, so it will be 85.5. In the third year, it will be again 10% of 85.5, so it will be 8.55, and here you will have 85.5 divided by 13.5. The life remaining is 30.5. If we calculate this, it will be 6.33%. So, we will further go with this, it will be 85.5 minus 8.55. So, it will be 76.95. So, this way you will go till the 15th and the 16th year, because the life is 15 years, it will go up to 16th year because of the half year convention followed, and in the 16th year you will calculate, and ultimately it will come as 0 in the 16th year. So, basically this is the method which is followed for different property classes. You will be given a problem, we will solve some problems based on this, in which the equipment will be given to you. You must be able to know under which property class it belongs to, and as per that the depreciation method is to be used, depreciation schedule is to be used, and in every year by having this known value of percentage of the first cost of the asset, you can calculate the depreciation charges using this MACRS method of depreciation. Thank you.